I think Starbucks falls into the category of not really having a good category. As investors, we like to put labels on stocks. This is a growth stock. This is a dividend stock. This is a value stock. Starbucks falls into really none of those. They pay a decent, sizable dividend, 2.5%, right? That's good, but that's not really what you would want for a dividend portfolio. You can invest in Schwab dividend, get 3.5%, and get a lot of share price growth on top of it. So anything with less than 3 for a dividend really isn't good enough for a dividend portfolio, in my opinion, unless it has really high growth. Starbucks does not have that. So to me, this isn't right now a dividend centric stock. It's not a dividend worthy stock. Neither is it value. Its PE ratio is above S&P 500, so it'd be really weird to call it value, nor is it growth, only up 13%. So we may say, okay, then that just means the stock is trash and we should move on. And I would maybe agree with you, except for this is one of the largest companies in the world. They are a huge name brand. Everyone knows about Starbucks at this point. They're almost everywhere. So, and they just got the Chipotle CEO, right? I think that's what happened. So there's a lot of expectation for them to maybe pick it up. Over the last decade, they really haven't done amazing either. Since late 2014, they're up from 43, which is fine, but still below the S&P 500 performance of up 200% over the last decade. But if we go just, back to 2010, maybe even not all the way back to 2009, but even something like 2011, up from 200 for 20, to 100-ish, if we're rounding, that's a 5x performance. That is dramatically outperforming the S&P 500. So if we're looking not at a 5 or 10 year time frame, but a 14-year time frame, or even less, more like 13-year time frame, 15, whatever, 14, 13, whatever, it's 1 year. You're now looking at a company that has outperformed the S&P 500. And certainly if you're looking back at lows in 2009 or something like that, this is a stock that has done well in the past and has built itself into one of the biggest brands in the world. So let's dive a little bit more into that. Like I said, with PE, this is a high PE stock. This is a stock that has underperformed the S&P 500 dramatically. It's only gone up 13%. I mean, if you include the forward dividend, you're double that. So to be completely fair to that, let's just say it's up 40% compared to the S&P 500, 90%. So you're still underperforming, but you are above S&P 500 value. S&P 500 is about 27 PE, 23 forward PE. So you have, if you go off forward PE, you have a dramatic overpricing here. You could say it like that. I'm trying to think of the exit. It's expensive. It's expensive compared to the S&P 500. Also, this is very concerning to me. You've missed your estimates the last 4 quarters. You basically hit dead on, so that's not entirely fair. And missing by 3 cents, that's still like a 7% miss, so that's not nothing. But the zero, we'll say 3 of the last 4 quarters you missed. A few really dramatically as well. That's not particularly inspiring. I don't really care about much looking at the dividend much because honestly, I don't think most people are buying the stock before the dividend. Its dividend's fine, but you're probably buying it hoping the share price goes up, and then the dividend on top of that is good as well. I think Starbucks is okay as an investment if you want it for the upside of if they get things back on track, if they can grow globally, then this is going to do very well. And I think it would. I think if they hit it, if they start doing well again, they're going to do very, very well. They have high margin generally. Their drinks, they're tasty for the most part. But I think for me, the biggest hiccup I have isn't even with any of this stuff here. It's primarily with what they do. My personal opinion is I don't think they have a large enough economic moat. I disagree with this pretty much because I've seen, at least where I'm from, many different coffee places, coffee shops, not just, the local small business owned one. I'm talking like not public companies, but decently sized chain ones. And there's a lot of them because it turns out there's really not that much moat when it comes to making a $6 coffee taste good. That's my personal opinion. So that's primarily why I wouldn't invest in Starbucks. However, huge name brand all around the world. People like their stuff. They're already everywhere. That's an advantage. I mean, other than the fact that, keep growing, but I still think there's room for them to grow. And if they start turning things around, they'll do really well. And they have a CEO now that has a history of doing so. You can see it reflected And the share price there, I believe that's when they got them. So this is a fine bet. And there's the biggest issue I have is just that it's not growing in its PE. Even outside of this, it's this. If this was at 18 instead of 30, I think it'd be a much better buy. I think there's worse investments to make. Just understand the investment you are making, which is this stock isn't crazy cheap. It hasn't grown particularly well. Those are the main things. It's not super cheap and it hasn't grown well. Everything outside that is speculation. I'm not saying you can't do well in it, but personally for me, this is not an investment I would probably make. And you totally can disagree with me. You all know what Seattle. I read Seattle there. You all know what StarBucks does. Let's look a little bit at the historical PE. I'm sure it's fluctuated quite a bit. Yeah, because of the new CEO, we are more expensive than we have been. We were bouncing between 19 and 24 for a PE, somewhere between 24 and 27 normal PE. We're at 31 for a PE and 30. So this is a little bit expensive. I think Starbucks is a good one to watch. If they have another couple bad quarters, just sell it. What do analysts have to say? 18 saying strong buy or buy. About half. It's almost exactly half saying buy, half saying hold, a few saying underperform. This is pretty normal for a non-dividend, you could say, growth stock. It's somewhere in the middle. Some analysts aren't saying anything, but they usually don't. Schwab isn't a huge fan. Give it a 64. They think it'll underperform the average stock, but they don't think it's going to do terrible either. Wide economic moat. I disagree with that. I think it's closer to narrow, but they have a huge brand, so that gives some credence. Right? 3 stars, hold, long, buy. Moderate ESG score. Let's take a little bit of a look at the dividend. Yeah, it's been hiking pretty dramatically, and it's because you've seen a lot of growth since 2016, at least a decent amount. But it also is clear to me they're trying to derive more profit. Yeah, 2016 you're up 100%. Your dividend's up a good amount too. If you want this as a stock to hopefully compound and be a dividend, I'd like it in that sense, but I just think there's cheaper opportunities in the market right now, personally. But anyways, if you enjoyed this video, I'd appreciate if you left a like or subscribed. I appreciate you watching, and I hope to catch you in another video.